What is good, NIO family? It's Rey-Jay back with another video, and in this one, I'm going to be talking about the one and only NIO stock and what you should be looking out for the future of this company. I'm also going to do some in-depth technical analysis and talk about where I see the share price going and why the entire market did take a bit of a hit after what the Fed just announced. That's very important. I'm also going to talk about what the news is saying about NIO and what NIO put on their Twitter page that makes me even more bullish for the future. Now, before I break any of this down, before I talk about where I see the NIO share price going, I do have to mention a couple of very important things first. The first thing is I'm not a financial planner, so please don't take this as financial advice. And also, if you guys can, please smash the like button if you want to see more videos like this. It not only benefits me, but benefits the entire NIO community as a whole. And the last thing is, if you guys can, please check out the Webull link down below to get some free NIO shares. If you use my link down below and deposit any amount of money after signing up for Webull, you are guaranteed 5 free stocks, each worth up to $2,000. Now, what I'm saying is you could always sell these 5 free stocks. You're going to get some free money for them, and you could buy some NIO shares for free. This is a limited time offer that ends in just a couple of weeks, so please check it out to get your free NIO shares, get 5 free stocks, and really improve your investment journey. So with that out of the way, let's get on with the video. Looking at NIO, we could see right over here that it's down about 3.52% for the day. Now, one of the things that's very interesting is it actually held up pretty darn well compared to other stocks out there. So I want to talk about the bullish and bearish situation and why I believe that, look, it is very possible for us to drop. And even if we do drop a little bit more, it's going to be what I believe is going to be the dip before this thing starts to rip once again, because we do have some bullish and bearish catalysts out there we have to attest to. Now, I also want to talk about the market. What's going on with the market? Why is the SPY down 1%? Why are we seeing crypto down like really hard right now, from 5 to 10 to 15%? The QQQ is down, the Nasdaq is down. Why is Tesla and NIO and everything down today? What's going on? Well, the market is very fearful. We're seeing the fear and greed index shift towards the fearful side, and that's because of what the Fed has been announcing. So what's happening in the United States is inflation is going up and up and up, and it's currently on the verge of hitting double digits. So we're still waiting for data coming out for later months, but right now we know it's really getting out of hand, and the Fed has remained quite dovish for quite a bit of time. And as a result of that, we have the Federal Reserve Governor Brainerd. She basically talks about the fact that, look, the Fed was very dovish, but inflation is getting out of hand. So as a result, we're going to see them prepare to reduce their balance sheet at a faster rate and actually become stricter when it comes to their monetary policy. So this means that they're going to be pumping less money into our economy. They want a more independent economy, and they're going to be raising the federal funds rate, which in turn just means that they're raising the rates for banks, which will cause interest rates to go up. So when interest rates go up, that's going to slow down our economy. Our economy is growing and growing and growing, but you can't have an economy growing too fast. You don't want inflation to be way too high. You want an economy that steadily grows at a rate of like 2 to 2.5% per year. And that's what we want inflation to be. Right now, it's at over 8%. So it's just too high right now. And the Fed really has to take action. Now, when the Fed becomes hawkish, when they become stricter on policy, that could easily cause the markets to take a bit of a hit, as I would say bonds and golds become a lot more enticing because they're going to get secure returns thanks to interest rates. And the stock market does seem a little bit more risky during times like that. Now, that doesn't mean NIO is just going to crash and enter a bear market and go back down to $1. That's not at all what I see happening. But it does mean that we could have a little bit of downside due to the fear, and also market makers that are using this as a catalyst for their higher returns. So as NIO dropped, it would have been maybe not as severe. We should have held at around 22 bucks, I'd say, today. We ended up dropping a little bit harder thanks to, I think, fear, and also market makers that are taking advantage of the options chain and loading the boats on these puts. So they use this to their advantage to make money, and to succeed in the market, there are going to be times where you have to trade like them. So this would have been a good time to load up on some, puts if you guys wanted to. It's really up to you. But the question is, what's happening now? Is NIO going to keep crashing? Are we going to go up? And it's a little bit tricky to tell because, look, NIO held up pretty darn well today. I mean, we held above, what is that? About 21 bucks. We held it very, very strongly. We did pretty well. We were down only 3.52%, which is not that bad. But here's the thing to be looking out for: two gaps exist, one that's lower and one that's above. The one that's above would take us to about 22 to, what is that, 22.46, so around 22.5, $22.50 a share. So I could definitely see us filling that, but the question is, are we going to fill this gap first? That's going to break us all the way down to like 1980, 1990. It's very possible that gets filled first. It's really hard to tell because we're not trading based off technical analysis. We're trading based off fear and market makers really dictating the stock. So it's very tough for me to make a perfect prediction. But I want to actually prepare you guys that we may see a big drop. And this is just an excuse that they're making. They're going to use the Fed as a big excuse to push us even harder. So they could drop us down to fill this gap, but then we're going to quickly bounce right back. Now, I don't know if we could actually drop that hard. I don't want to promise that, but it's a possibility because we do have this gap and we're getting closer to it. It's just like a $2 drop compared to where we are right now. It's less than a $2 drop, so it's very possible that we fill the gap. That takes us to about $1980, 1980, something like that. And then after we fill that gap to the downside, it's very possible that we get that bounce. So the bounce could come around the 1980 to $1950 level. We bounce up, trade a little sideways, then we push right back up to fill this upper gap right over here. And this upper gap is going to be in the 22.5 to $23 range. It'll take us right back where we are. So one of them is most likely going to get filled first. It's very hard to tell because it depends on, are we going to get pushed down? If we do start dropping to the $20 level, if 21 does not hold, I'm warning you guys, if 21 doesn't hold, it's very possible that we are going to fill this gap. I want to prepare you guys for that. And I do see that as a very likely possibility. And if that does happen, don't panic. Don't be too scared because we also have a gap up here and we are going to gap up later, I would say within a week or two. So just be prepared for these big moves. My job is just to prepare you guys. Now, many technical indicators are finally starting to show what we already know. Obviously, it's still looking a little bit more bearish. We saw that flip from the 9-day moving average in MACD, showing red histograms and negative, or should I say, yeah, negative momentum, so to speak. RSI did end up dropping down to about 47.05. It used to be in the, what is that, the like 65, 70 range. So it did end up dropping. So like I said before, I'm not promising that this is going to happen. I do see us dipping one last time. If $21 doesn't hold us, we're probably going to fill the gap down here, going all the way back down to like maybe 1980, maybe around there. And then after, I expect us to bounce. Maybe it's going to happen by Friday, maybe next week, and continue to run right back into this channel that we are in and fill this gap at a better level. So I want to prepare you guys for this. Be prepared for anything. There's no guarantee we fill this lower gap yet. I just want to put it out there, but I do see it as a very probable scenario, and I just want to prepare you guys. So anyways, there are some very good pieces of news coming out for NIO 2. A lot of big articles out there are now starting to kind of reiterate the fact that NIO is looking into mass producing smartphones. Now, they're not necessarily at that production phase yet. They're still in the research phase. But to me, that's very bullish news and just shows the fact that this company is just innovating left and right and it's doing very well. Now, I also want to talk about this right here. And they're reminding us of how insightful this company is when it comes to innovation because Ganesh V. Iyer, he basically talked about the fact that they're doing a lot of innovation and research in the USA as well, in Silicon Valley. And that, in my opinion, is going to be incredible, absolutely incredible for the future because their innovation, their changes, and what they're doing is going to push this company up for the future. And that makes me very, very excited. Despite some of the red we're seeing, I'm still very bullish long term. So, anyways, the company is making some very good moves. I'm going to make another video in a couple of days about why I still believe in this company and some of the innovation you're going to see coming from them, which once again makes me very bullish, and what else I still see coming from this company. So Anyways, short term, yeah, it's very possible for us to gap down. I'm not guaranteeing it. I'm just preparing you guys because it's a possibility. And after that happens, I would expect us to also gap up in the near term future too. So it's not the end of the world. I also want to remind you that long term, we're very bullish, or at least there are many bullish indicators still for the long term. And this company is not a dead cat in the water and still has insane potential. You got to give it time, be very patient. The market's not in the perfect state given what's happening to our economy and other things like that. So there will be red days just like this for many months to come. There will be some sideways action, but going forward, I still see this thing accelerating and growing, and I'm still very, very bullish for the long term. Anyways, I thank you for listening. Have a great rest of the day, and I'll see you guys in the next one. NIO to the moon, and peace out.